John, what do you want to talk about?
Oh, there's plenty to talk about. The report is going to be obviously something we need to talk about. The cattle low for Monday, we'll talk about that. And a little bit about, the general economy. We got to squeeze it in here this morning. This is before you could bleed it over into 8:30 and it wasn't that big a deal when the market opened. But now actually there's a lot going on and it has everything to do with soybeans. So we'll definitely hit that.
Fun to have stuff to do.
Yes.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
John, welcome back to another Insider. We have had a busy news week. We started the week with Trump tweets, and then we had a heck of a report.
Yeah, it was one of those reports that they'll talk about for the next 10 years, maybe more. We've had a couple of these, and this one will be, 20 years from now, they'll be talking about this. No one's really ever seen anything like this. The acreage switch is the big deal. People focused on the yield, which was astronomical on the corn. It was above the highest guy, and there was always one in the pile that's just ridiculous, and it was above him. But then that
they went with the StoneX number, basically, didn't they?
Yeah, and then on Twitter, the one guy Arlen had put that out there. Got a hard time. Now everyone's making a meme about how they have to apologize. So, the online's kind of just unreadable. Everybody's fighting, and it's the thing is, this happens every year, like this sort of deal. But this really was the kick in the shins at the very end. What happened is the switch to acreage. They had 2 million acres come out of beans and go into corn, which changes everything. So for clients or people, there's lots to talk about in beans. We can't get too specific here, but I am definitely making moves in beans. This sets up for a larger move later on if South America has a problem. November 26th, you got to start watching that for marketing opportunities. Not this week or next week. I'm talking about if it were to move fast on weather, because now the acreage shift is going to be large going back to beans next year. So you already have to start thinking about November 26th marketing. And then corn, we could talk about corn, but those are some awfully bad numbers. And the worst part about corn is that they put the export numbers are ridiculous. Like it has to live up to. There's going to be good exports, but the bar is so high after this report. And then the feed and residual use was, I think, 450 million bushels over last year. With less cattle around, you know what I mean? It seems like that number was there just to make it not an utter disaster.
Just to make the math work,
yes.
Basically.
So they're already figuring out if they cut yield, which is likely, that, all these other categories are so high just to make the numbers even work that it won't matter. It'll just offset it. And I agree with that. So it is what it is. You don't usually see that in August report.
Let's talk. What we're doing, what we're recommending as producers and stuff. So the acreage shift is driving corn down, but it gives opportunity for beans to go up right now, along with Trump tweeting, right?
Yes.
And then, but by the same token, if corn, there's a solid chance that there'll be $2 cash corn out there. So, right. It's going to be low threes at some point. Yeah, just the way things are right now.
Even if the futures bottom now, and they could easily bottom now because it didn't have that bad a reaction from it. It's going to be basis in the cash market is where all your risk is going to be for corn. And there's really nothing you can do about that other than store it. If you're paying 5 cents a month, that's not going to help. But if you have on-farm storage, that's really your only defense against this because, there's going to be people that take advantage of, where is all this corn going to go? We've really never ever seen anything like that. If these numbers are right, it's definitely well over what we have for storage in the United States, including commercial. So it's, whether they put it on bags on the farm, whether they start fencing off a quarter and start buying cattle,
right?
And to put it through the cattle, something's going to give, and that's where you would see the $2 in the cash market. And again, even if the futures stay here, it's not going to help anybody. It'll feel good that they bottomed, and they might have, even though it's down 4, I think, overnight.
So let's say the numbers are right, and we're going to stay like this. Next year, acreage shifts again, right? Because now corn, we have way too much, and if we did actually plant this many less bean acres, and Trump's tweet about China, if all of a sudden we do actually start exporting to China again, what what does that mean for next year? And that's why you're recommending watch that November 26th, right? What about spreads? Are you watching any spreads?
You got March, May, and July. This crop is new crop, but call it old crop because it's going to be old crop as soon as they start harvesting it. And then next year is November 26th. So November 26th would be kind of stuck in the mud because of the acreage perception now, and that can change. The ratio between corn and beans favors beans. The bankers are going to favor beans because the expense of corn, and then with the inputs as high as they are, that puts November 26th in a tough spot where July or March or May on any problem now can go up quite a bit. But that's the problem that we have short term is it's still 290 million bushels instead of 350. That's not alone by itself bullish enough just to go. Even though you saw some short covering and you've seen it go, it doesn't mean go out there and buy beans, but it puts it in, when beans get like this where anything can set it off, from trade deal talk to actual trade deal to weather, not being perfect from day one in South America, then all of a sudden that creates the opportunity for the front to go a lot more than the back end. It was already very narrow. I think before the report, July, November was +6, +8. 0 is really rare unless it's overwhelmingly bearish and the outlook is dire. July can definitely go under, but it's different than corn. It stays inverted most of the year. Like July and November, not bullish last year in soybeans. And it was 35-40 cents above, in the springtime. That's very normal. If it gets running hot, it can be $2 above, $1.50. They're just two different markets. So that definitely jumps out at me right away. And then corn, it's tough to talk about corn and opportunities other than if December 24 gets low enough, I might go fishing there. It's
one of those where it's just down there and it makes sense it can't go.
Eventually it'll bottom, but again, the trouble is in the cash and the basis markets. That's where you're going to have the issues. It doesn't just solve itself overnight. You have to get through all this corn, and that's the problem. This did happen in 2014. It sparked a 3-year bear market, basically, or 2.5-year bear market, because the supplies get so large. And there's going to be guys online arguing that it's not there. Well, the cash and the spreads will determine when it's not there. And maybe it is the great grain robbery of 2020. It's going to be noticeable very quick in the futures. Right. You're going to see signs everywhere of that. I wouldn't hold out for that. I think that it's going to take forever to work through this corn. The only good news is it's already moving very well, and it's probably going to move even better. And the world supplies are low. On paper, they really haven't accounted for Brazil's big one yet. But, all in all, it creates all these opportunities, very different markets than we had, 2 weeks ago or a week ago. Completely different. They were all bearish without any hope, really. And now you have one that everybody's watching very close.
So let's jump into the cattle market a little bit, too, because that's had an interesting week as well.
Yep. You're starting to see that back and forth. Yesterday had a nice 250, 230. Feeders were up 3, I think. Then we went down very quickly, $2. So $5 swing. And that's what you would see, when it starts to get frothy at tops, or at least more volatility. This is the kind of action you see. Now, Monday's low is the one you want to watch. If we take that out this week, then that's a different pattern than we've seen. So that's what you want to watch. Monday's low for cattle, and all eyes are on here this late in the week because cattle's had rough, Thursdays and Fridays. And that's where the big move was last week on Friday. The week before was Thursday. So watch that low. And the product's going higher, but the cash was going lower, and then it went a little higher yesterday. So you get mixed stuff going on. And just amazing that the demand is hanging in here. That's the most amazing part.
Yeah, like we've talked about, there's just as good of a chance that it just starts to steady out here, or that we're going to trend or just kind of stay in this area. But likely with all the people who are in here that you got to see some sort of reset before it does, right?
That's the issue. Is like in a perfect world, it would just stay at the price it needs to be. But if people exit that market after collecting for 2 years straight, and then profit taking, that'll bring it down very, very fast on that alone. And then if cash were to come off or product, then you could see it really cascade down really quick. Not that it wouldn't bounce back. I don't think anybody argues that it's not a strong market, but the initial first push down in a very long time would be probably a lot faster than you think it's going to be.
Excellent. How about we had some news on the stock market today? I do see the Dow starting down a bit today. Any thoughts or any news or any mention on that side you want to talk about?
A lot of guys that I follow that I kind of trust with the numbers, and they usually are looking at the order flow. They don't like what they see in the stock market. They've been warning like this is a little different up here. More retail guys are buying it, meaning the rich guys in the golf course that brag about their stocks. Those are the types that are buying it. Doctors, lawyers. The hedge funds have stayed out of this last trip up, so it looks like a weaker rally, and there's warning that it doesn't have the strength of before, and the AI and all this stuff is kind of, like tech. Eventually, that story gets old, and now they're even talking about how the electricity is going to go through the roof because of all the AI stuff going on, and just eventually it gets to be too much of a good thing, and then you start seeing the negatives, and then a rollback and all that stuff. So it's accelerating really fast. I'm sure there's going to be a lot of corporate earnings by firing people and using AI. I'm sure the books will look good, but consumers probably tapped out. And it looks tired up here, but still, you can't argue with the bull. Did we make new highs? I lose track because it makes new highs all the time, and it just goes up and it never goes down. But
it's just like cattle.
Yeah, it is. It's acting like cattle, but it's been doing that since 2008, really.
Yeah, I mean, interesting to me. I did see a chart the other day. It's really the S&P 10, the 10 AI stocks that are in the S&P are up crazy amounts, but the other 490 have not made a profit in the past 3 years. They're not growing.
Isn't it like 74% of the move is in those big stocks?
Yeah.
Yeah, and that's not super healthy longer term. And again, I think the consumer probably is a little bit tapped out here, less spending. You're probably not going to see great numbers, but I mean, it just keeps trucking. Today it's down 160. We'll see what happens there.
Sounds good. Anything else to add? The markets are about to open.
Nope. Time to start calling. It's created opportunities, and my clients definitely call, see what's going on, check in. We haven't had anything. Now we have a lot to talk about, so at least the markets are interesting.
Exactly. Why don't you leave your number so they can call?
218-731-1578.
Thanks, John.
Got it. Bye.
You just like being a media star, don't you?
Oh, yeah. This is what I would love to do.